So, what are the best ways to start investing at a young age? In this video, I'm going to show you exactly what I think are the most effective ways and simple ways to start investing. Hey, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. In this era, it's very crucial that everyone knows what investments are and how to invest properly. The problem is that out there are scammers and people who just want to take your money away. So in this video, we're going to talk about the best and safest way to invest your money without the need to have a degree. But hey, if you enjoyed the video, leave it a like and let me know in the comments down below what are your best tips when it comes to investing. So the first option that we have when deciding where to invest is a retirement plan. And yes, I know you're young, but being young is one of the main reasons why you should make a retirement plan. You should open a retirement plan right now. I'm going to talk about this subject and why it is so important in a later video. Subscribe so that you can be notified. With a retirement plan, you can start growing your pension so that when it comes the time to retire, you won't have surprises. Here in Switzerland, you can start a retirement plan with just $100 a month. And if you think about it, it's not even that much. And also, if you have an income, remember that you probably will be able to deduct what you put in your retirement plan, so you can even pay less taxes at the end of the year. The downside of retirement plans is of course that you will receive your investment back only, usually, when you retire, and also the interest won't probably be that high compared to other types of investments. But nonetheless, it is a very good way to start investing because you don't actually need experience and also it is very safe. If you want to start a retirement plan, I can recommend you to contact a financial advisor. I would avoid brokers and make sure that the advisor has no interest on proposing you one plan over another. The next option that we have is to invest in an investments fund. In this case, the possibilities are various. You can choose many markets where the investment fund would invest your money, and they can suit almost every investor needs. The downside is that the risks increase, and yes, of course it depends on what type of fund you want to invest in, but still it's more risky than a retirement plan. And also, this is the first step into serious investing. Where the retirement plan is more of a saving plan, the investment fund is true investing. That is also why the interests increase, and that is also why the risks increase. And hey, remember the general rule about investments: if you want to increase the potential profit, you must increase the potential loss, also known as risk. So just be careful. And how do you start investing in a fund? Again, you should ask for help to a financial advisor, so he can give you the best option for your case. And again, once more, make sure that the advisor has no interest on selling you one fund over another. But even if you ask to an advisor, I can give you some tips when analyzing a fund. And hey, bear in mind, these are very basic tips. I'm not going to show you how to analyze a fund. First, remember that it's very normal for the fund to not have every year a positive year. So it is very normal to lose some money for a couple of years. What it's not normal is that the fund has a worse performance of its index of reference. For example, if I'm analyzing a fund that is investing in the US stock market, I want to see that the performance is equal or better than the S&P 500 or the Russell 2000 for at least 10 or 15 years. And I'm going to talk about indices in later videos. So again, subscribe to be notified. The last option that we have, which is the most difficult, the most risky, and also the most satisfying, which is also what I decided to do, is investing by yourself. Now, this is a very large topic and of course I cannot cover it in this video, it would take me hours. So let me just tell you that if you can open a retirement plan or invest in a fund in the next week, you cannot start investing in the next week. You will need months, if not years, to start investing properly. So just don't think that it's easy and it's a fast way. It's not. In this case, you have many markets to choose from, but in my opinion, the easiest market is the ETF market. ETFs are a little bit similar to funds, but of course they are different, and they need education in order to be understood. So if I say it's easy, don't think that it's so easy. But if you really want to be an investor, it's going to be a beautiful way. But it's also going to be hard. You will have to read a lot, you will participate to courses. If you really want to test your skills, you can even be certified. And no, you don't need a degree, but still, you need to be educated and you need to invest first in yourself and then in the markets. And I'm going to talk about how to choose trading or investment courses in later videos. And these are my best ways on how to invest at a young age. So if you enjoyed the video, leave it a like and let me know in the comments down below what are your thoughts on how to invest properly. And I'll see you in the next video. So how do you save money effectively in your 20s while studying? So first thing first, you need to decide how much money you want to save. Even before knowing your expenses, you need to decide exactly how much you want to save. That can be a percentage like 30, 40, 50, even 60, 80 or